Hey guys, Jason here for TheChartGuys checking in on Tesla. Another, well, pretty much an ugly day is what we expected following that big drop after hours with more earnings. And we had a couple of scenarios that we set up going into today's action, and we were watching pre-market. It was pretty clear, at least initially, what was going to happen. We saw this clear 15-minute downtrend setting lower highs, lower lows, and then right away in the morning we knocked out 251.58. So that support is gone. We come down and we almost back test it. We get a little bit over top, but we see clear rejection, and now that is going to be a key level for us moving forward into tomorrow. We had a little bit of a bounce, not unexpected when you get down here. Your RSI was down at 24-ish and change, and then we got a nice tightening range, 5-minute pattern, just a tightening channel here. And then we saw another low, 230.23, and now we're just sort of going sideways. Ultimately, we needed to figure out what we were going to do here, and no clear indication in direction at this point. We are massively oversold, and we are recuperating from that bad earnings report. We've established a few levels, and right now it's a wait and see game. If you believe in Tesla long term, make your entries. I don't care. But if you're playing technicals, you got to wait for those setups. And right now we see the makings of a 15-minute equilibrium, which can be useful. So 255. How are we going to copy this? Come on, there we go. 225.55 is going to be the first low of that on that bounce this morning. And now we are seeing this current 230.23 as a key level and 226.71. And only because it just ever so barely held above 226.60. So I'll be watching these ranges if we happen to open in this area tomorrow. And that's a big if. The first time we cross one of these levels, ideally we'll see continuation of the CQ, but the first cross, just like we saw in pre-market this morning, will give us an indication of which way the wounded market is going to drift in favor of this poor beat up Tesla ticker. That's it for today, guys. Thank you so much. Wait for your trades. Sometimes you just don't have an opportunity, and being eager to get into a trade just because you want some of the action can ultimately really hurt your wallet. Be careful. Hey guys, Jason checking in for Netflix. The saga continues for the bounce. The bulls have been in control for the last 2 days, and we kind of expected this action based on what we saw yesterday. I know there's some short positions taken, but they were quickly covered in the TheChartGuys community because we anticipated weakness, did not see it. And when you don't see what you thought, it means you're wrong. Technical analysis can tell you when you're right, and it can also tell you when you're wrong, and you need to take your small loss and try again another day. Bulls absolutely in charge today. On the daily, we have resistance up here at 329.85. Likely we'll see that tomorrow. I'm imagining that the 4-hour bulls, or maybe not the 4-hour bulls, perhaps the hourly bulls. Yes, hourly bulls are overbought. Let's fix this chart. Here we are. Nice hourly run, and now we're consolidating. I would expect to see, it would be beautiful to see a flush to the upside, test 329.85 before pulling back and allowing that RSI to cool off on the hourly time frame. Nice little pennant formation shaping up here. And let's go ahead and clear our charts just to make things easier for us. So hourly bulls in charge, setting higher highs, higher lows. Currently, we are seeing support at 316.30, so that was the big flush right before pre-market, and we're seeing some after hours support at 325.05. So as long as bulls maintain these levels, I'm also going to look at this flush. 322.29 is going to be an important level as well. So as long as bulls keep setting these hourly higher highs and higher lows, they are in charge. And again, watch out for that resistance on the daily time frame way over here, 1329.85. Once we start to consolidate, if and when that does happen, we look to our hourly and 4-hour supports. We just identified those. So the proposed scenario would look like an open, a flush, coming down, knocking out supports, and continuing to the downside. If that happens, great, be ready for it. If not, watch for a break at 329.85. Look for a consolidation pattern, a nice pennant, a nice bull flag, and wait for the action, and then make your trade once the market has decided which direction it's going to take Netflix tomorrow. So congratulations, bulls. If you got into that bounce, 2 days of really solid gains, and good luck to you tomorrow. Hey guys, some videos just take like 4 or 5 takes to get the ball rolling. This is one of them. This is attempt number 5. So let's just go with it. Apple, bearish day. We saw a lot of resistance at that high day from yesterday, 209.15. So we'll get into the smaller term time frame and take a look at what happened there. But this is a clear rejection from what we're going to call a double top. So an area of resistance where you come up and you hit that level twice before pulling back. Also, we've got ourselves a bearish engulfing candlestick. So this candlestick completely encompasses its previous, which is also a bearish signal. So what you would look at expecting more downside following these two signals. So let's go look for support levels. We don't have a lot here. On the daily time frame, we have support at 202.36. As long as bulls can maintain a higher low above that level, the daily trend will be intact, but we moved up rapidly, so it means we can move down rapidly as well. Let's go look at the 4-hour time frame. 4-hour bulls are not as in control as we would like to see. We had this double top support right here, double bottom support at 206.71, and we're looking at the lower wick here, the lower wick here. We also saw a confirmation, and we are actually just grinding that. So I may have got ahead of myself saying we have lost that level. It is still holding 206.71. If bulls lose this level, then we don't have a lot of support down until 202.36. In fact, we don't have any support on the 4-hour time frame. So it's all about what bulls are going to do with the range here. We'll move our candlestick up, or our line up to 209.33. That's the high. The bulls need to get back over top, and they need to hold 206.71. Hourly time frame may give us a little bit more information. However, it does not. We just see that this consistent zone of resistance and consistent zone of support is giving us some clear signals. So consolidating completely sideways, allowing that RSI to come down. 4-hour time frame, RSI is happy right where it is. Daily, happy right where it is. So it's all about what the market is going to take the direction for Apple here tomorrow, watching these two key levels. Right now, 15-minute downtrend is very much intact, and there's a lot of proving to do on the part of the bulls here. They need to turn the 15-minute around. They need to turn the hourly around. They need to hold this 4-hour level, and the daily bulls need to fend off this bearish attack that's currently about to capitulate and have a major decision being made with the make or break of the 206.71 support. We'll see what happens tomorrow, guys. Good luck with your trading. Thank you so much for watching. Hey guys, Jason for TheChartGuys, taking a look at Amazon. This is an earnings day, so we're not paying as much attention to what's going on over here because we lost a lot of ground. Amazon got knocked down pretty hard, and the low of the flush on our earnings report was 1900 psychological. So that just goes to show you how much power retail traders actually have in this sort of market, because robots don't particularly care about psychological levels, of course, unless they're programmed to. But people like you and me, we place our bids at round numbers, and that's why they work consistently as key levels of support and resistance, and why when you're playing these levels, it helps to adjust your own orders to be a little bit around a psychological level, not necessarily placing a buy right at 1900. But you know what? Getting ahead of myself and rambling, 1900 psychological support has held on the low of this flush, and we'll get into the 5-minute time frame in a little bit. So let's use this momentum. Let's say we're going to go down tomorrow. What are our daily supports? Well, we have a little bit at 1884, and we've got some at 1872. We'll see what happens if and when we get down there, and we will take a look at the 4-hour time frame. Actually, just jump right to the 15, because this is going to be important information for us. There's that psychological level of support. We had a massive bid down there that must have caught a lot of action based on this volume, but 1900 support, and then we also saw a high of our bounce at 1973. So initial range has been set for us. We'll be watching this range tomorrow. Should we break bear, we know where our supports are on the daily time frame, 1884, 1872, and because we gotta go so far back here, it's unlikely that these small areas of dips and support are going to come into play as much as these major daily levels are. So if somehow bulls manage to turn things around, 2005 is going to be a resistance for us. And let's go back a little bit more. Yeah, all I see here is 2014 88. So the important thing is we have our initial range from our after hours action. Pay attention to what happens pre-market. If we knock out 1900, it's likely that we're going to drift down and test other supports. If we somehow manage to take out 1973.82, look to 205 for resistance, and look for your first early morning's action to set up some key levels and some trends for us, giving you an idea of what's going to happen. For me, post-earnings plays are always waiting and allowing the market to set up some consolidation patterns or some sort of some visual cue that's going to give you a direction about what the market's going to do. It's all about waiting for your trades. So be careful out there. Thanks for watching, and we'll follow up tomorrow's analysis on Amazon.